For TraderInsight.com, I'm Adrian Manns, and I want to get everybody ready for the boot camp. If you are a repeat attendee or if you're a brand new attendee, I want you to get ready for this thing by starting to think about these trades the way that we think about them at boot camp. So first and foremost, let's go through the trades from May 3rd, 2017. I just want everybody to wrap their head around a couple of different ways to enter these and manage these positions. So, of course, this is the trading plan from Wednesday, May 3rd, 2017. Here we see Energizer Holdings, and we see that we had a fastball short setup with a 57.13 entry, a 57.61 stop, $56.54 initial target. Central pivot right at 58 bucks. And then if you look over here, that also winds up being the confluence range because that $58 central pivot, of course, lines up with one of our key support resistance levels and the retracement zone inside that bar. So everything's set up just the way that we like to see it. And let's see how this one played out once the trading day started. Now, before we get into it, just remember on this one, I just want to focus on the central pivot. We did have a support and resistance area that occurred just beneath that, but for this trade only, let's just focus on this one thing, right, the central pivot. So right out of the gate, we see the stock opens and then travels down through the $57.13 entry price, goes straight down to the profit target, $56.54, and then keeps going, essentially gets down below the S2 support line and then reverses back up again. As it's coming higher, what you should be thinking is if it gets up to that $58 inflection confluence zone that we identified on the trading plan, then we're going to short this early. So in my case, resting stop right underneath there, or you can use that $57 and 61 cent stop area as a reversal zone or just above it. But in this case, we were waiting for the confluence area. That didn't happen. It came back down. And on a second entry at $57.13, this time a very logical thing to do was to go and extend your profit objective down to this $55.93 area. If you were at one of our previous boot camps, then you should already be thinking this way. But if Miami 2017 is going to be the first one that you've attended, and I know that's a case for a few of you, then I want you to start looking at these and trying to pick them apart and figure out why it is that we were looking for the 55.93 inflection rather than just the 56.54 target. Now, if you set your order up as a bracket and it got you in and out automatically, don't worry about it. It's still a nice big profit on this move, right? 57.13 down to 56.54 is nothing to sneeze at. But the 55.93 extension is based on the fact that we had a very easy penetration of that level first thing in the morning, and that on the way back up again, we can see it closed right there, opened right there on the next bar, traveled down through, came up. So that's going to be right around where I'm expecting price to inflect, maybe a little bit lower right here, but I'm not looking for that on these trades. I'm looking for the thing that's the most likely thing to happen, and that's where I want to get in or get out of these trades. The next one on the list, Mid-America Apartment Communities. This is ticker symbol MAA. And we see once again, we've got the trade set up. It was a short at $99.10. The stop up at $99.45. Initial target $98.61. And over here, the central pivot, $99.69. That happens to be the only place that we find confluence between the factors that we focus on at boot camp and the factors that you should be focusing on at home by now. So again, if you haven't been, then what you should be looking at when you pick that chart apart intraday is whether or not there's an overlap in the significant key levels where we might see price reverse. And in this case, you see confluence was at 99.69. We've also got 99.43, 99.52, 99.66, and 99.84 to look at over the course of the session as potential reversal areas. Now here you have a case where right out of the gate, if you were watching this one, if you weren't focused on the Baltimore chops, if you had your eye on this ball for a few minutes, then you had a good opportunity to set up this trade. So when it opens right here at this stop loss level and starts traveling higher, we've got the opportunity to look for this 99.69 inflection entry and to provide liquidity on our trade entries. So by putting the order to enter the trade, 99.69, as the short sale entry and keeping it there as a stop limit order, what that allows us to do then is rest the order, wait for price to come to us. Again, we're trapping, we're not hunting, right? Price comes up, hits 99.69, travels a couple pennies higher, reverses, and in this case, you've got the additional 59 cents of profit between 99.69 and 99.10, where our entry level is, right? 99.10 is the entry from the plan before the price starts moving lower. And then look what happened. You've got the 49-cent per share move, 99.10 on the entry, all the way down to $98.61, and you've added 59 cents to the bottom line. So these are the things you should be looking for. We drill these things day after day after day, and once you've got them in the back of your mind, it's really important that you don't get lazy about it, that you don't start falling back on your laurels. You want to look for these entry opportunities on every single trade. Next one was Zimmer Biomet. This is ticker symbol ZBH. And a lot of you might be inclined to just say, why do I want to even look at all these other things? The central pivot seems to be a very, very frequent place that confluence happens. Well, look at this trade. We had a 120.19 short entry, stop at 120.49, initial target at 119.69, and yeah, that central pivot, 120.72, winds up being the confluence level. But we've also got levels at 120.46, 120.56, 67, 75, and 99. And if you look at the way the stock opened, you did have the opportunity when it opened at 120.46 to go and place an order up at 120.72, and you would have been filled there. But as the stock came back down through, let's say you didn't get that order off first thing in the morning, you were looking at the Baltimore chops, or you were looking at something else, or maybe you were doing one of these other trades, and you see that the price comes back down, you have the opportunity to rest an entry on a move to 120.56, and you also know that there was a key level at 120.46. Both of those things got you in well ahead of the 120.19 planned entry, and when the price came down to 119.76 and reversed, it got you out at 50% to target before it went all the way down to the target. But if you got the reversal first thing in the morning, then that 50% to target exit doesn't feel so bad because you added all of this. Now, of course, there are multiple opportunities to re-enter this, especially when it makes this setup here. So if you guys are reading your book before you come to the boot camp, if you're reading Around the Horn and you look at the breaking ball and the checked swing and all that kind of stuff, then you should see that there's opportunity right here as the stock bunches up in this range between 119.76 and 120. And we see these very firm lows, very firm highs, and then this move back down through. So that's all stuff to keep in mind. But in this case, what I want you to see is there were not just the confluence entry opportunities really on any of these trades. There were a bunch of opportunities, but in the case of ZBH, having those other levels on there really managed to keep you in front of the opportunity even when it looked like it might have got away from you. So there you have it. I'm looking forward to seeing all of you in June, and I sure hope this puts everything in perspective and keeps your eye on the ball. But if you have any questions, shoot me an email, adrian@traderinsight.com, and I hope you had a great trading day today and an even better one on deck for tomorrow. It's the best trader education anywhere, only from traderinsight.com.